All across Southern California, we saw very little improvement in 2010, and Orange County was no exception. No rent growth in 2010. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Orange County update. Overall occupancy in Orange County is at 94.9% as of year-end 2010. That's up 1.2 points annually. And the good news for Orange County is it's seen some steady improvement in occupancy over the past year and a half or so. And that separates a little bit from Los Angeles, where we've seen a little bit of fluctuation, and from Inland Empire, where occupancy rates have really fluctuated in the past 6 quarters. And the only one that compares favorably is San Diego, where occupancy is now at 95.4%, making it the only SoCal metro with a rate above Orange Counties, and we've seen pretty steady improvement there as well, with the exception of 4Q, where there was a little bit of downward movement. But while we saw a little bit of variation in occupancy trends across Southern California, we saw no variations among the major Southern California metros for rent change in 2010. And of course, the key word there is major, because we did see in the smaller market of Ventura Oxnard very significant rent growth in 2010, but in the larger markets, minimal rent growth at best. In San Diego, Los Angeles, and Inland Empire, rent growth of just 1%, and in Orange County, very bottom of the pack, no rent growth at all, despite posting a very healthy occupancy rate as of year-end. And that put Orange County near the very bottom of the national rankings, along with metros like Tucson, Fort Myers, and Las Vegas. Hardly a good group to be a part of, and all of those areas have occupancy rates around 90%, so there's tons of ground to make up there. Digging deeper into the data for Orange County, very minimal rent growth by product age group or by submarket. And at the top end of the market, the newest stuff, this does make some sense. There's been a lot of new supply in Orange County that came on at the wrong time as the economy started to tank. But in the middle age and older product age categories, it's a little more concerning not to see any rent growth yet. And in the submarkets, no real significant change in either direction. The submarket with the best rent growth in the past year was Anaheim, with rent growth of just 1.8% year over year. No other submarket had rent growth of even 1%. And on the flip side, didn't see deep cuts anywhere either. The biggest loss came in Mission Viejo, where rents fell 1.1%. So it appears what's happening is that apartment operators and owners are just real hesitant to move rents in one direction or the other, given what happened during the recession in Southern California. And so just some real hesitancy to move up rents until those job numbers start to really come back. In Orange County, there was some job growth in 2010, but not much, about 6,000 or so jobs. But it's just going to take a lot more job growth in order for rents to go up more meaningfully. And how that'll happen, it's hard to tell, because this is a market that's so dependent on consumer spending and real estate for its economy, and those aren't sectors that are looking to gain a significant number of jobs very quickly. And so the outlook for Orange County is still a little bit of a question mark. So that wraps us up for Orange County. Until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.